RSI, how to use the relative strength index. So the RSI, or relative strength index, it's a popular technical analysis tool. It's useful for detecting overbought and oversold conditions. So when the price has made a rapid movement in a single direction without a pullback, potentially you'd see overbought conditions. So the real value of the RSI is predicting when the price may be at a point where a significant correction is due. It works on the principle of price momentum. A high reading on the RSI means that it's had a significant upward movement over a given period. A lower reading on the RSI means that the price has made more significant downward movements over a period. If it's basically at the top of the RSI, it is overbought. If it's at the bottom, it is oversold. I'll explain that to you. The relative strength index is an oscillator. That means its output is it ranges between a fixed high and low, where the low is 0 and the high is 100. So it oscillates back and forth in between those highs and lows. An RSI reading of 30 or below suggests the market is oversold, whereas a reading of 70 or above suggests the market is overbought. In order to turn on your RSI in Coinigy, you go here to Indicators, and you select Relative Strength Index, RSI. Okay, now when it comes up, it's going to be purple and you can't see it. Definitely if you're posting in Telegram, for us to see it, you got to go into settings, hit the little cog format, and go into style, hit the color. I would change it to white or potentially yellow. RSI is an oscillator that you don't want to use by itself. You definitely want to use quite a few other things with it. It's important in order to limit the false signals, what I do is I set my upper limit to 80. So overbought would be 80 and oversold would be 20. And again, potentially you guys will develop your own style and you'll be able to pick what you like personally. But I've already got one open here and I've got it marked, so we're going to use this one. Now this is a Litecoin. Real quick, just to explain. So over here, you've got your numbers like we talked about, 0 to 100. If you want to change the size of this in this bar down at the bottom for Coinigy, you left click and you can drag it up and down to basically spread it out, okay? You can also come in here, and if you want to center it this way, you can move it with your mouse. Just hold the left button. A lot of people would think that, hey, you're just basically going to look for these overbought and oversold conditions, and that's what the RSI is used for. If you use it just for that, you will get a lot of missed signals. So it doesn't work all the time. But what you want to do in TA is you want to find a couple of signals that when you put it together show confluence or show the same thing. Now, so we can find anytime the RSI hits the 20, you should see a bounce and a move higher. So down here, you see you've got your bounce. You follow it straight up here. And you see we hit 20. And then you got this bounce. Okay, now this was close. This was about 25. You can see this was basically oversold right here. So when you get a bunch of selling, this comes lower, right? When it's buying, it pumps it, all right? So here you see it sold off, came down real close to oversold, and then you got to bounce higher. Again, so you see this down here, it's at 30 up here in the price action. It comes down and you get a bit of a bounce and then it rolls over. This works. It's now if we go the other direction, if we're looking, so here it is overbought, and you can see overbought here, and you get a pullback. Here you're overbought, you're above, you're right at 80. So potentially here you go, you get your pullback. Overbought, this means there was a big run up and it pulled back a little bit. So if you have your settings, you go in here, if you want to have them on 70 and 30, you'll just get more signals. And if that's how you want it, that works too. Overbought, and you get retraces right after over all these overboughts. So when you're looking at a pattern, if you're holding basic attention token and it starts to get overbought, now it doesn't always, these can be overbought for days sometimes, depending on what chart you're looking at. Like you could have basically be up here in this range for a period of time. Like it doesn't always bounce back. So again, this works pretty well, but it's definitely not perfect. So when you're thinking about when to exit a trade or potentially when to start taking profits, your RSI gets into this area. Potentially you could start to scale out. But again, it can stay in this range for a period of time, and you could ride it up a little higher. You'll find what works best for you. Now, so overbought and oversold, this is one idea. Divergences work even better. And again, they're not perfect, but when they play out, it works pretty well. So divergence is when the price action doesn't match the oscillator. So here you can see I've got this peak to this peak. Now there's a slight upslope in the price action. So you've got your high, and then this is a higher high. But in the RSI, you've got your high, and then this is a lower high. So this is bearish divergence. And you can see you got the break to the downside. Now this yellow line, you can see you've got a high here and a high here. Down in the RSI, and basically up here they're flat, they're level, right? So they're about the same height, roughly. Real close to it. Okay, so this is exaggerated bearish divergence where again, it doesn't match up. So you've got your high and then a lower high. So the downsloping down here is bearish divergence. I've got a whole video on bearish divergence. I'm going to link that right above right now so you guys can check out the bearish and bullish divergence. That's a whole different aspect. Kind of hard to wrap your mind around that, but let's finish talking about RSI. Now, one of the best ways to use RSI is when you use support and resistance. What I mean by that is you got this blue resistance level up here. So you've got overbought conditions. You're up here above 80 on the RSI. You've got bearish divergence, which obviously is bearish. You're going to see a good chance you're going to see a pullback after that. And then you've got overhead resistance where you would get a pullback. So chances are pretty good. You have a lot of different things showing that you're going to get a pullback right here. Now here actually is another place where you've got upsloping in the price action and downsloping on the RSI. And then you get the pullback right here. All right. So these are little things like when you're looking, let's say you bought a breakout of a triangle that was down here. And you're thinking, how do I play this? Chris, should I take profits? When should I take profits? And you got your target up here. Well, I've reached my target, but it's kind of still working out. What should I do? Should I take profits? Well, here you get up to overbought conditions where you get a bunch of buyers buying quickly, right? Price shoots up too fast. And then, so potentially you could have taken profits based on, you're all the way up in the 84, 82 range as far as the RSI goes. So you're probably going to get a little bit of a pullback, and you did. Well, then it keeps running up, and maybe you scale out. Maybe you took 50% of your profits here, and then you still have 50% in the trade. Then it shoots up higher, and then it gets up to overbought again. You're up in overbought, but then you see your RSI has got bearish divergence also. So you're overbought, and you've got bearish divergence. And so those are really good indicators that you're going to see a pullback and it dumped. Okay, and potentially you put a pattern with that. So maybe there's a rising wedge that's forming. Okay, so you got a rising wedge that say it's going to dump. You got RSI, a couple different reasons why it's going to dump. Overbought. You have a pattern that's breaking to the downside, 68% chance of a break to the downside with the rising wedge. So that's basically in confluence of what you're thinking, matches up with what you're, a couple different indicators are showing that you might get a pullback. You do get the pullback. So it's important. You have to put a couple different things together: RSI, MACD, price action, support, resistance. You want to have as many clues about what you're trying to prove that point the same direction. Now this is Nano. Here you got downtrend in the price action, and you've got an uptrend in the RSI. So this means it's bullish divergence. Whichever directions, if it's sloping up here, it's bullish. If it's sloping down, it's bearish. Zoom into the 1 hour, you can see, so let's say you're in this Nano breakout. Here's your triangle. You get to a point where you're overbought up here at about 80. But you got your high, and then your next high is a higher high, your price action sloping higher. But in the RSI, it's down sloping, so it's bearish divergence because they don't match up. Anytime it doesn't match up, it's divergence, right? And then you just got to figure out if it's bullish or bearish. Here, you can see clearly it was overbought, ran up to here and pulled back quick. Go through and you can back test this. I recommend go through some old charts and just back test this and see how it works out quite a bit, but not always. So this is the 50 line. You can go through here, you hit left click and then Alt H and you can draw these lines, horizontal lines forever, right? Control Z deletes, is undo. Now, so we got our 50 line. You'll notice that generally speaking, you're in an uptrend when you're above the 50. Okay, so here is above the 50, you're trending higher. Here you're above the 50, you're trending higher. So it's a bearish sign when you break below the 50. So here you broke below the 50 right here, broke below the 50, and then you're in a downtrend. It's a little late here, it's not perfect. Yeah, if you guys see me draw the 50 line, and you'll see sometimes it'll find support on the 50 line. Here it broke down and broke below it, and then you get a downtrend. So RSI works really well in trending markets. If you try to use RSI on like a 15-minute time frame, it gets really noisy, and it's just all over the place. When I say noisy, I just mean it's just a bunch of constant movement. So in general, I'm not real big on shorter time frames for what we do, how we trade. But thanks so much for your support.